Hello, welcome back to another monthly mortgage update. Today I'm going to talk about two key reports that are going to kind of set the theme and the trend as we enter the second part of the year. All right, so earlier last month, the housing market gained valuable information from two key economic reports that we've all grown to love. And while these reports lay the groundwork to the basic summary of what's happening in the market, it definitely does not tell the full story, right? So the first report is a Case-Shiller home price index. It was released in late April. It showed that home prices are appreciating at a faster pace. Okay, that's report number one. Report number two is a pending home sales index. Okay, that was released in mid-April. And now that report revealed that home sale contract signings decreased again. So those two reports are going to kind of create two key themes as we enter into June and more specifically into July. All right, so first theme is that the wind is calming for projected home prices longer term, right? So it may not happen right away in 2022, but we could start to see things kind of calm down as we get into the first part of 2023, which seems like a long time, but ultimately is only 6 short months away. I've had girlfriends shorter than 6 months, so to kind of tell you that we're not far away from that, right? So back to the Case-Shiller home price index for February. So that report showed that home prices are appreciating at a faster pace, both monthly and annually. Okay, so the month over month number for the 20 city composite increased by only 2.4%. So not a huge gain month over month, right? But year over year, that same 20 city composite showed an increase of 20.2%. which is up compared to January's figure of 18.9% in annual growth, right? So we're still trending upwards. We're just not making leaps and bounds upwards, which could be a good thing. Now, this ultimately does not mean that the market will see immediate results in home prices, as May is a start to the busy season of people buying homes, right? So we're going to get May numbers as we enter June, so kind of think that. So why the rush in May? Well, think school is out for summer, right? People are taking vacations and people are buying homes, right? So if home buying ramps up in May, like we think it will, because it historically does, home inventory could shrink to even lower levels, which lower inventory levels could push home prices up even higher. It's a big yikes, right? Now, because inventories are so low and because the demand is still overwhelmed with home buyers, home prices are likely to keep rising, or keyword here, stabilizing, unless the Fed has something to say about that in the upcoming July FOMC meeting, which is just 6 short weeks away. Now, the Fed already announced a 50 basis point increase to the bank lending rate earlier in May, and is expected to do another 50 basis point hike, upwards of 100 basis point hike again in July. Now, for those of you that are kind of like, what's all this basis point? Well, 50 basis points is essentially 0.5%. 100 basis points is 1 full percent, right? So they've already hiked it 100 basis points year to date. We're expecting another 100 points between now and the end of the year, or maybe 150 basis points, right? Which is crazy. Now, the Fannie Mae Economic and Strategic Research Group, that's a mouthful, predicts that home prices will be appreciating at just a mere 3.2% by the end of 2023. Now, I know what you're thinking, 2023, Ralph, let me get through Christmas of 2022 first, right? But this is how things are trending, right? So it's a big change, right? Because it's a big change compared to the year-over-year increase that we're seeing of 20.2%, right? So it's a substantial drop over the next 18 months, but it's not projected to happen anytime soon, right? So that's the first major theme, is calmer waters, right? Now, second major theme is that there will be fewer boats or buyers on the water, okay, which is not a bad thing. So in March, the pending home sales index decreased for the 5th consecutive month, falling 1.2% from February, right? And as of May 26th, last week basically, it fell another 16%. That's a double-digit decline, right? You're like, oh, see, I told you, we're going to have a bubble. Not so much, right? So though decreases are never a good thing, this is actually a little music to my mortgage ears, because this could mean more homes available to buyers in the near future with a decrease in contract signings, right? So increase in rates is thinning out the herd, and it's hopeful that the housing inventory will rise, which means bidding wars will potentially start to cool off, right? So there won't be 10 buyers for every home. Maybe there'll be 3 buyers, which is a better thing. Now, according to someone much smarter than me, Lawrence Young, that's a chief economist for the National Association of Realtors, they said that multiple offers will soon dissipate and be replaced by a much calmer and normalized market condition, right? So again, all these things, rates are pointing up, inventories are pointing down slightly. We're kind of stabilizing, which is a good thing for homeowners. So bottom line, rates rising from 3% at the start of the year to approximately 5.5% as of May 26 have definitely had an effect on the cost of a home. And we are slowly starting to see effects on the pending home sales, which would be the leading indicator of where price appreciation is headed. And that means to calmer waters. Ultimately, continuing rate increases and rising inflation will be the driving factors of where the housing market is headed. And with the next Fed meeting in July, we will know just a little bit more to this mortgage puzzle, just a few short 6 weeks away. I'm Ralph Tapia. Thanks so much for listening. And remember, I loan it so you can own it. Until next time. And in the famous words of Mariah Rose, don't count your chickens until they've been incubated, which means don't count on a housing bubble unless the data tells you so. And the data is not telling us that a housing bubble is near. We'll see you soon.